our next guest questions the stamina of the market comeback. Let's bring in hedge fund manager Mark Yusko. He runs Morgan Creek Capital Management. Mark, always great to speak with you.
Hey, Melissa, great for having me on today.
Why question the Fed backstop?
Well, I think it's math, right? I think what the Fed is really ended up doing here is devaluing the currency. You know, since we started talking back in October of 2018, you know, the equity market's basically flat. Gold and Bitcoin are up about 50%, and gold stocks are up about 80%. So what's happening is the nominal value looks like it's rising. That's what the Fed's doing to raise nominal prices, but the real value of our assets is declining.
I get that, but in the short term, Mark, are you trading the market that we have, which is a market that seems to want to go up no matter what you throw at it?
Well, it certainly has gone up in the last, or went up for 4 weeks. It basically went up from March 23rd to April 23rd. And it's pretty much been flattish since. It's up about 3-4% since then. And it's been very choppy. And it's actually down, right? 10% down double digits for the year. So I think what's interesting is we call it the great separation. And, you know, in our fund, we are long and short. So we're about 50% net. We have a lot of longs, a lot of shorts. And what we try to do is focus on the things that we think still have growth and try to be short the companies that we think are going to struggle in a post-COVID world. So there are a lot of things that are very, very overvalued that are still great shorts. And, you know, we're up mid-single digits this year with the market down 10. So that's pretty good.
What are your highest conviction shorts right now?
You know, we're still short a lot of the traditional retail. So, you know, the Amazon roadkill. We're also short some of the really overvalued tech and software companies. I mean, there are companies out there selling at 20 and 30 times sales. Forget earnings, but 20 and 30 times sales. So we're doing a little bit of shorts there.
And highest conviction longs at this point?
You know, on the long side, we really like the safe haven trades. You know, we love oil services, for example. They got beaten down. So Halliburton and Schlumberger have been really nice performers here recently. And we think there's lots of other things, gold miners, gold and gold stocks. We like cash here, actually. So we actually have a decent amount of cash. But other things on the long side, there are some emerging tech companies that look good and will do better in a post-lockdown world. And then, you know, we still favor a lot of the emerging market growth stories. We like China a lot, and the China tech companies, in particular, like Baba and Tencent, have been really good.
Hey, Mark, it's BK.
Yeah.
How are you? I got a
BK,
question
how you doing?
About that. I'm doing quite well. Question about that China trade, right?
Yeah.
They've been extraordinarily emerging markets, China. I understand that that economy may be coming back a little bit faster, but it doesn't give you any pause that those companies could be delisted from the U.S., and would that have an impact on their valuations?
It's a great point, BK. And it's interesting because we've seen this movie before, right? There are a number of companies like WuXi Biopharma that voluntarily delisted to get a better valuation on the Hong Kong market or the A-share market in Shanghai. So I think the threat of delisting is a mistake. I think the whole China Cold War 2.0 thing is a mistake. I think we should be collaborating, not fighting. But I think what you'll see is for investors who are nimble, you'll actually get a chance to buy at a cheaper price because these stocks will fall with the threat of delisting. But then when they relist in Hong Kong, they'll go up a lot because there's a lot of money on the sidelines in China that's looking for a place to invest.
Mark, always good to speak with you. Thanks.
No, thanks for having me. Talk to you soon.
Mark Yusko, Morgan Creek Capital. What do you like, dislike about what Mark is buying and selling, Guy?
I like the fact that he's staying short some of these beaten up retailers because they've given you an opportunity to trade around them. I mean, Macy's is a great example of a stock that's really only gone lower, but it's had significant bounces along the way. So I think that makes sense. And one of the things he did mention, and I think this is also concerning, and this sort of gets into Tim's wheelhouse and BK to a certain extent as well, is the fact that if the dollar starts to weaken in a measurable way, a lot of people might think that'd be bullish for stocks. I'm not so sure. So again, be careful what you wish for, administration, in terms of a weaker U.S. dollar. You might get it, and it might not be how it looks on the back end.